Recording in progress.
Know what I'm saying? Like so a lot's gonna come this week. This week you guys should be big.
Within 5 minutes looking for the confirmation email that I said was on its way.
Oh, good.
So you guys got some good activity over the weekend. You know, you got to see a bunch of sales. And I mean, heck, Rogan, you in this situation, I mean, you seen Jay just come off as big as week he ever had.
Yeah.
You know,
Yeah.
had his best week ever, and you were there for it. So that's pretty
I
cool.
was. And I saw a mix of everything. And I
Yeah.
told, Jay was like, what did you take away? We have this talk after everyone, and I'm like, listen, probably the biggest takeaway this week is to not ever judge a sit from the beginning, because I saw him sit with a woman. She had the most I don't care, I don't want to be here attitude, made a sale to the whole people. They were like, interacting, asking all these questions, and then we don't want any.
Yeah.
So it just went the complete opposite of what I thought. So for sure, like, I learned, do not, judge it from the beginning and just follow through all the way to the end, because you just don't know how it's going to go.
Love it. And you know, that's just week one. That was just, guys, you've been here for a week. You guys been here, you know what I'm saying? Like, so a lot's gonna come this week. This week you guys should be bigger, should be better, right? Like, you made one sale last week. We gotta at least get two this week. You know what I mean? We got to at least, right? We gotta get better. Yeah, he said three. So there we go. Like,
What's wrong with three?
reach
I
for
like
the
three.
stars. I'll tell you guys this. Last week I was humming. I made 8 sales last week.
Now, is that how you got to your folks were talking about you in the meeting?
Yeah.
You were like right there with who was it, Christina?
Usually off of 8 sales, I would have wrote about 8,000.
Okay.
Because my average ALP is usually like 1,000.
Those are
But
smaller.
I was writing all these like $300, $400, $500 deals, so I had to like really get the sits, the activity to keep getting more, you know, because I know it's all a numbers game at the end of the day, guys. Like, it's all the numbers. I can literally go through my planner, tell you my schedule, and it's like you always look for a little bit of room for improvement. You know, you got to look at your last week, see how you did. You know, all right, that's what I'm telling. I'm asking you, how you guys do, right? Look at it, see how you did, and then just make adjustments. Like 2 weeks ago, my show ratio was like 30%. This week, you think my show ratio was 30%? No, my show ratio was sky high. It was over 70%. The average starting out. So you got to look at these numbers like weekly and adjust yourself and figure out and coach yourself up, because no one else is going to do it for you. You know what I mean? So you write your numbers down every week. You look at them. The good thing is Impact does them for you as well. But yeah, Impact does it, which is pretty sweet. If you report your numbers in Impact every night, it does it for you, right? But what I would also suggest is do them on your, like, in your planner at the end of the week. Just go back and do an analysis of what you did, you know, because then you can always tweak something. You know, 2 weeks ago it was show ratio. I have somebody who calls and sets my appointments, so I worked with her all last week on extra solidifying, making sure our show ratio would get good.
So do you think that was a disconnect between where you wanted to be and your lower ratio? Was that there wasn't enough solidification? Is that kind of root out the cause of what?
So typically, like, if I had 35 appointments set and only gave 10 presentations, something's busted in the phone call.
Okay.
You know what I mean? There's something that we can fix in that phone call. So now I got my caller. I'm sitting right next to her while she's making phone calls, just giving her little pointers. Hey, great job, but like next time, it's very important information, not just information.
Sure.
You know what I mean?
And I'm sorry to keep on
No, you're
asking
good.
questions, but
I love it.
I was actually thinking of getting a friend of mine to do calls for me. Like, how do you structure someone's compensation for someone's gonna call for you?
Yeah, so you can do it hourly or bonus.
do it by appointment set or appointment seen, have
Yeah.
something like that?
I've done an appointment set. I paid per appointment set before, paid hourly. To me, the hourly actually works better in my favor because I make them come to the office and I can be there.
Okay.
You know, where if it's more of like a out there, like this person's in Pennsylvania and I'm here in Chicago, I'm gonna maybe do like a more commission structure if I can, because it's only gonna get you more results.
Right.
Like, hey, $10 an appointment set or something like that. People set 10 a day for you. Pay them $100 next day. Key's paying them quick because then they want to keep doing
Right.
it.
Right.
Gotcha.
Like I had a lady in Pittsburgh when we used to get 60 leads, and I had a lady in Pittsburgh that would literally walk around the city and get child safety kit referrals, and I would pay her $5 a referral. She turned it into a little hustle. She'd call me up. I got the cards. I go grab them really quick, pay her the money right there. 2 days later, she's calling, I got more cards. You know, so it's like you just get them hooked on it and have fun with it. You can't just have a caller like you're gonna be my caller. Like you gotta have fun. You gotta incentivize them.
Right.
We give out scratch off tickets. You know, we try to I incentivize her like, hey, if I write 30,000 this month, I'll give you a bonus of X. You know, so we're not gonna talk about that, but that I mean we'll get into that stuff. But like I'm
I
saying,
know I'll
just
put the cart before the
have
horse.
fun with the opportunity, of
Right.
course. And you know, the first step is being a beast on the phones. So you can't even go get somebody. Your guy can't call for you, bro, until you are a beast on the phone. Why?
Well, if I can't do it, I'm gonna tell him.
Exactly. I'm a beast on the phone.
Now, when you say beast, you mean beast in
Beast.
terms of
I've said everybody I've
number of
talked to.
dials, number of
Everything.
appointments,
Phone calls.
I'm like one
appointment
for
set.
one. As long as I actually
Yeah.
talk to the person, I'm there.
Yeah. If it's competition, get in there. Like if you see like, all right, in my team huddles, I announce people that have the most phone calls for the week. They might not write the most ALP, but it shows their work ethic,
Right.
right?
Right.
So you gotta become a beast at everything in your own life,
Right.
right? Like I'm not saying I'm better than anybody. I'm just saying I feel like I'm a beast on the phone,
Okay.
right? And you should feel like I feel like I'm the best version of me on the phones I could be, right? And then you give yourself an edge. Okay. So today we're gonna talk about the second half of the presentation. Let me
Okay.
close this. So Mason, you kind of stuck in there, but every week, you know, go over your situation, give yourself a self-analysis, and try to tweak things on a weekly basis to get better. Now, today we go over the second half. The first week, you guys should be good with going over there, getting control, get them on the screen. I got you here. You can hear me. You can see me, right? Can hear me. You can see me, right? All right, I can only see your arm. I can't see you. Can you turn your screen on? Now, I'll tell you this. I've made sales with no screens on. It's very possible. Some people just don't do it. But you want to do it because it gives you an advantage, all right? So you got that down. You went over your intro. You can do the introduction to the company, the first slide. You can go over the no-cost benefits and collect referrals. That should be where we're at. Now, we talk about the whole life and term, needs analysis, and then the rest of this week's going to be, you know, tomorrow handling objectives proactively, right? And then closing, you know, you have closing and then a recap of the whole week's, right? So like by the end of this week, you got to be doing 100% of the presentation. Like we got to. Do you want to be in training forever?
No.
No?
I've already been in training.
You want to get out on your own where you can make your own money in your own schedule. Look at Mason, man. You're out on your own now, brother. It's good. You're not like, but you know what? Mason's here every day at 8 o'clock.
Right.
So Mason's just treating this like he's putting himself through boot camp, you know? So don't forget, when you get out of training, then boot camp starts. That's 100 presentations. The key would be getting through them as quick as possible, because if you get through them in 8 weeks, 10 weeks, you've built up so much skill. Like I'm literally driving myself crazy just because I'm trying to get the mail out on time. You know what I mean? Like you have to learn how to get in the habits of making sure your systems are in order. And it's cool because over 8 weeks, 10 weeks, you get 100 presentations in and you feel really confident, right? The first 20 though, woo, those are hard. Sometimes you actually really might think about quitting. You're gonna be like, I don't know if this is right for me. I seen training, all this success, and now I'm out here and this is hard. How do people do it? Just look at your numbers and you'll see where you need to improve on, okay? But that's why we have like this 0 to 100 contest thing over here. And as soon as a new person starts, they get a little avatar and we race them to 100 presentations, right? Just so this shows that they're moving along on the board. Because you can never forget during those 100, you're gonna want to quit. It's gonna be hard, and you just can't give up. You can't, because after 100, you're good. Promise you guys. Promise you. You'll feel that confidence, right?
I'm not even at 100 yet.
You're not even at 100 yet. How? I mean, you feel good now, right? So from a month ago, do you? You feel like you're much better?
Probably like it's 70.
Like 70?
We'll pull up your impact. We'll see where you're at and give you exact numbers so you can hit it, right? But do you feel yourself getting better? Like you're going through it.
Yeah.
Yeah, right? Are there days that are hard where you're like, oh crap? Yeah, you know? So it happens to all of us. That's the key. Is it's gonna happen to every one of us. And someone on this call is gonna quit. Someone say it's too hard. And they're gonna quit. And that's okay. That's okay. Cause you gave it a shot. As long as you give it a shot, it's all that matters. Now guys, the second half of the presentation, be prepared.
Mhm.
Be prepared. All right? Like, get yourself to the point where when it's coming time to go over the benefits, you're where you need to be on the PowerPoint. You got everything ready to go. It's all up. Okay? So basically, you guys use the PowerPoint. You guys, right? You don't use the board, right?
Are you talking about
For whole life versus term.
Yeah, he has this right.
Yeah, so you guys write it out. All right, so here, just for an example, I'm going to share my screen. And on the presentation, when you get to the blank screen, that's when you know it's time to go over whole life versus term, right? Well, guys, there's over 48 different types of life insurance. You know, it's 2021, and most people we sit down with have life insurance. However, what we found out was not everyone knows what they had or how it worked. So there's over 48 different types. They actually fall under the two main umbrellas of term, which is for the if in life, and whole life, which is for the when, because it's inevitable. We're all going to die. None of us know when, right? Now, term, if you pass away while you have it, you're covered. Anything you get offered through your employer will always fall under this category. And just listen to what I say, all right? Like, I ask questions as I'm going through this stuff, okay? So
Wait, work life insurance is all term?
did you hear what I said? So term, anything you get through work is gonna fall under term,
All the time.
like 99% of the time.
And,
So let's just say, you know, for this example, I always say that because some people are like, what do you mean it's gonna be $30 for me? And let's just say, for an example, you're gonna be 35 years old and you wanted a 10-year, $100,000 policy. Now, term works in periods of 10 years, periods of 20 years, periods of 30 years. We have the 4-year term.
Is there a 15 too? Or
There's a 15-year decreasing term and a 30-year decreasing term. Those two are for mortgages, okay?
Right.
But 10-year term, typically people use it for income protection, right? So 10 years go down the road, you hit the age of 45, you obviously still need the same coverage. What do you think happens to the cost if you want to keep it? You hear what I said there? I asked a question. I want them interacting with me a lot during this period, okay? So what do you think it's going to cost if you wanted to keep it? Do you think it will go up? Do you think it will go down? Do you think it stays the same? Yeah, you're right. It goes up. And what happens is it goes up and it doubles. And in 10 more years go down the road, you hit the age of 55. You obviously know you still need it. What happens is it doubles again. And then all of a sudden you make it to retirement. Now, guys, we all hope to get there, you know, have a pension, 401k, Social Security. You can start getting some money after all the years of putting into it. So I tell them. And then guess what happens is with your life insurance, they either raise it right through the roof where it's pretty much impossible to afford it, or they just cut you off altogether and say you're no longer allowed to have it. So guys, we consider this type like renting, because families will pay into it over the course of their whole entire lives. They'll make it to this certain point here, and then they give the keys back to the landlord. There's nothing left. Now, I'm not going to bash it ever in the presentation. Term's great for certain things, I tell them. Income protection, mortgage protection, debt, but it's not meant to be in place forever. Now, the other type of insurance that we have here is called whole life, and that's for the when. So same person, 35, might be a little bit more expensive up front, but once they get it, it's locked in for life. So you can be 45, you can be 55, you can have a heart attack, get cancer, make it to the age of 100. It's still guaranteed to be there no matter when you pass away. It also builds up cash value at 4.5% interest, which is like 20 times the rate your bank can grow your money at nowadays. And it also has paid up options. So you know how people pay off their house? You can pay off your life insurance. So guys, term is like renting, whole life is like owning. Do you understand the difference between term life and whole life?
Yes,
I do.
I get the verbal yeses.
yes.
And then I say, now they always make me ask, no right or wrong answer. Which one makes the most sense for your family?
Whole.
Whole. Why'd you say whole?
Because it'll last until as long as I live, and the price will stay the same.
Yeah, that's actually what most of the members said as well. So, you know, basically when we look to protect the members, you know, your union, they go through contract negotiations, and every few years there's always some types of benefits changes. Now, this last time around, the members, us, we brought a list of concerns to the board. Now, have you guys ever heard of the Labor Advisory Board? No? Okay, what it does is it actually sits 50 union presidents, and every year they'll sit together and they'll come up with solutions to problems that the members are having. Now, this time around, the members, us, we brought a list of concerns, and there was actually 6 of them. The first one was the lack of permanent and portable benefits. You know, they're finding out that when we get near retirement, our benefits get cut back so much, it's almost like there's nothing there, right? So the first area that we looked into in that is for final expenses. Listen to the verbiage. Now, Joe, did you ever think if something were to happen to you, would you want to be buried? Would you want to be cremated?
Buried.
Buried. Okay, why'd you say buried? Is it just like the traditional way that your family always does it?
Yes,
Okay. So they say, you know, the average burial cost nowadays. You want to take a guess what the average burial cost is?
10,000.
10,000. You're right. It's actually, they say nationwide between 7 and 15,000, which you can see that on the screen now. And they say a cremation, guys, is a little bit less. It's about 3 to 7. And keep in mind, that's today's prices. You know, every 20 years, milk, bread, eggs, should I mention the G word, gas, right? What happens is it goes up and it doubles. So in 20 years, you're going to be looking at, you know, 15 to 30,000. And guys, this is the only area that the company's ever going to recommend on the needs analysis to the member, whole life. It's never going to recommend whole life anywhere else. It's only going to recommend it for final expenses. Next area of concern that they had for the members was our loss of income. Now, Joe, you guys rely on each other's income? Yeah? If something were to happen to you, would that make things harder around the house? Okay. So basically, Joe, I know it's hard enough without you. Imagine without that paycheck. Our company would recommend, you know, anywhere between 3 and 5 years of your income being protected for your family. So now, Joe, you can pick. If you don't come home, this way, Mary, the day after losing her best friend, doesn't have to go to work. She can grieve for a little bit of time. We can give her anywhere between 3 and 5 years is what most members go with. Okay, so do you get any life insurance through your job? Yeah, you do. Okay, what do they give you? You think it's like 10,000? Okay, just spend it right here. If they get anything through their job, spend it right here. If they say, yeah, it's 1 year of my salary, spend it. All right, so there's 1 year, you still got 2 to 4 left. You know what I mean? Spend it. Just whatever they got, just spend it. Spend it like it ain't nothing. Get rid of it. The next area of concern that they have is for your mortgage. Now, do you rent or own? Own, okay. And let me ask you, how long have you been in your house again? You've been there how long?
12 years.
12 years. Did you do a 15-year or a 30-year mortgage?
30.
30. So you got about 18 years left then, huh? Okay, great. So see, I just did the math for them. I did it for them because some people are like, you know what I mean? It's like, no, just do it for them real quick. All right. So we did the math for them. All right. And here we go. If something were to happen to you, Joe, Then I'm assuming Mary, you be the one responsible for the mortgage? Yeah. Okay. So guys, we actually have protection where if something happens to Joe, we can pay off the house for you, Mary. And then I know the taxes out here in Illinois are a little bit crazy, so we'll have some tax protection for you too, okay? You think she ain't buying mortgage protection? And the next area of concern, guys, is gonna be for your child's education or any debts that you guys have. Now, you got 2 kids. This always works. Ready? If you want them to go to college, great. If you're no longer here, can we give them that opportunity? Huh. I make $100 by saying that line every time I make a sale. You know why I make $100? Because I get 200,000 of accidental, right? And off of 200,000 of accidental, you make $100.
Okay.
So those little add-ons that you never want to write down real quick.
Say it again.
If you want your kids to go to college, great. If you're no longer here, can we give them an opportunity? And I promise you guys, when I do it that way, they never tell me no. Because you'll sit down with some people that are like, I paid for mine, they can pay for theirs. Or you'll hear all kind of crazy things.
So do you ask them if you want your kids to go
I
to
say, if you
college?
want, I don't even ask them. I tell them, I say, if you want your kids to go to college, great. But if you're no longer here, can we give them an opportunity? And it's true. And then look, and I'll tell them, they don't even got to use it for school. They can start a business with it. You
So if
know?
they don't have any debt or anything, would it be 200,000 for school?
I do 100,000 a child, but then I'll usually get to 200 all the time just because I'm like, you driving the highways out here? It's crazy out here. You see, they got 4 or 5 lanes. You think if something happened, it's probably gonna be out there on that highway. So how often are you on that highway? Every day? Mary, we gotta max him out with his accidental. So Joe, we're at least gonna get you to 200,000. It's the most I could get you at this point. It's only 50 cents a day, but if you die, man, it's gonna be an accident. They say statistically speaking, 4 out of 5 people that die before the age of 65 is because of an accident. You know what I'm saying? So I get it all the time. And if you only get 100,000, you make $50. Which, to be honest with you, that was gas money back in the day. Because I would spend $50 a day getting in and out of the field.
Oh, sure.
Yeah, $800 a month in gas.
Josh, you normally present in this order. I don't know what you do.
It depends on the situation. This is like the perfect example. If they're a senior, guys, you typically only got to go over final expenses. And what else I'll do is I see if they have a mortgage. I do ask them it. I see if they have a mortgage. I see if they're married. If they're married, then I talk about Social Security protection. Hey, when you die, let's give her an extra 2 years of your Social Security. She's going to get the higher one. That means she's going to lose $800 a month. Well, what's $800 a month times 12? Okay, now let's times that by 2. Let's at least give her a cushion where she can have 2 years of her same lifestyle before she has to make any major adjustments. That's getting a $300-400 check. So what most members did was they just take a little bit of their pension and put it towards this or something. Let's make it up. But what you're doing is good for them. It's not like I'm being a sleazeball. I'm doing something that's literally going to help his family.
Right.
You know, everything we do is to help their family. Like that's the big picture, guys. Like you can be like, I'm in this sales environment. It's great. But with all this, I mean, you're literally changing their life. Now, how can you explain it to them? Can you explain it to them good enough to make them understand that? You know what I mean? And that's why we have the script, to stick to the script, right? That's what I'm doing right now. I'm saying the script to you guys. That basically I was taught by Tommy, right? All right, so we went over to 4 areas. You ready for this? Now, Joe, they always make me ask, if you only got to choose one of these 4 areas to have protected, God forbid something were to happen to you, what would be the most important? The husband usually says income or mortgage. And then whatever they say, if you guys can pretty much see, I can draw now. Let's see. Let's draw. Whatever they say, I circle it. You know, let's just say he said the mortgage. I circle it and I say, why? Why did you say the mortgage?
Well, she can't pay the mortgage without me.
She can't pay without you. Okay. Well, yeah, that's definitely a major concern then. Now, Mary, if something were to happen to you, You know, what would be the most important that you would want to have protected? They usually said education or their final expenses.
Mhm.
Unless she's making good money, then they typically would say the income, right? But let's just say she said child education. I said, kids education, why'd you say that? Oh, to have a better life than you had. Okay, great.
Whenever you did our option, you or whatever they just decided,
No, no, I don't know what you mean.
like, option A is always gonna be above and all presidential option. And then the pick some plus gets some extra. Now, you wanna make sure that option B covers their most important thing that they just picked. So if they pick 150,000 for his income coming in for 50,000 for the 3 years, would you make the second option around that to base your A option off of?
Here's the thing. You gotta give them what they want, give them what they need. Don't be trying to give them something they don't need. Show them why it makes sense. I know, like option A, yes, we do. We go higher. Some people want more. Some people it's like I'll go like more paid up, like getting them to a point where they can be paid up by the time they hit retirement. And then my option C is always what the expert simulator recommends. My option C is what the expert simulator recommends. My option A is like usually like 200,000-300,000 a whole life. And I explain that if they're our age, I explain to them the investment of it. You know what I'm saying? And pulling out the cash and having all the paid up insurance and just setting their family up like if they can. If they have the income, I'm not gonna do it to someone who's making $1,200 a month, obviously. But if he's making like $5-6 grand a month, he's 23, 24 years old, I'm gonna explain to him the whole life side of it being really beneficial that he can literally stop it even in 20 years and probably have 100 grand paid up if he had 300,000. You know what I mean? So just think about that stuff too. Like your situation per client's always gonna be different, right? But they asked, they picked. All right, so check this out. Now, once they pick, you say, okay, now guys, your last no cost benefit is gonna be your needs analysis. And look at this, I already got it up and ready to go. It's gonna be your needs analysis. It's already there. It's right on the screen. I'm ready. I'm rocking and rolling. I got my energy going in the presentation. My voice is going up and down. I'm not being like very monotone and boring with the clients and staying at the same pace the whole time. You know what I'm saying? So use your voice, right? Play with them a little bit. Make them laugh, make them cry, make them buy, they say. So your last no cost benefit is going to be your needs analysis. Now, what I like about your needs analysis is it actually takes into account your current situation. It determines if you have any gaps in your coverage. If you have any gaps in your coverage, it's going to show you what it recommends. However, if there's none, nothing will pop up. Now, Joe, have you ever been to a financial advisor before? You have? Okay, great. Well, when you go to a financial advisor, as you know, what they do is they put in place a plan for your future. And before they put that plan in place, they look to make sure the plan is protected. Now, when you go sit down with a financial advisor, one of the first things they do is they run what's called a needs analysis. Now, before they do that, they typically will charge their clients anywhere between $600 and $1,000 a year to do this for them. But because you're in the union, they actually set this up for you as a no-cost benefit. So, Joe, I got your birthday in there, February 2nd, 89. Mary, what's your birthday? All right, so your birthday is January, whatever, 3rd, 92. All right, perfect. And then we got little Joey Jr., right? Joey Smith Jr. And what's his birthday? July 1st? Okay. What's he, 2 years or 3 years? 2018. All right, gotcha. So, got you guys in here as a family. Now, just a couple questions based on the three of you, nobody else. Any internal cancers in the past 2 years? Any insulin diabetes? Any cardiovascular diseases? Any heart attacks, strokes, blood circulatory disorders? Any oxygen tanks, terminal illnesses, or Alzheimer's? Do either of you use any tobacco in the past 12 months? No? Currently on probation or parole? You guys are behaving, right? All right. Any arrests for DUIs in the past? Okay. Now, just get me close, Joe. Roundabout, what would you say your take-home pay per month would be? $4,000 All right. And then Mary, 1,000. All right. Mary, you didn't have nothing, right? Oh, your mom got a policy on you when you were a little kid. You know how much that's worth? 10,000. Okay. We'll put that in there for you. And then Joe, you said you had what? The 100,000 through your State Farm, right? And that was linked with your car insurance. Okay. Perfect. Perfect. So look at that. Basically, guys, I filled it all out here, and you can just read them the questions. Do you your take-home pay? How much life insurance do you have through work? Do you have any insurance outside of work? Is there any other insurance outside of work, guys, besides the State Farm and the 10,000 that Mary's mom got you? No, that's it. Okay.
And that's what we do when we do the drawing. This is the
Right,
same
yeah,
exact
right.
thing.
Right.
Mm-hmm.
Do you currently have insurance to pay off your mortgage in case of death? So if you forget to ask them on the circle, ask them right here. Do you have insurance to pay off your mortgage in case of death? Oh, no, you don't. Okay. Well, if something were to happen to you, you said you've been there for 12 years, you had 18 left, and your mortgage balance was what? 140? Okay. And then guys, once you always got to click checking. Okay, always click checking and then hit submit.
Hey, Jay, whenever you do that,
Mhm.
every single time I mention it, I always get someone to laugh. I always pause. I'm like, okay, guys, do you remember having Alzheimer's? And it gets every single person to laugh.
Mm.
Just a little joke.
His little corny jokes. He said, "Do you remember having old timers?"
Like,
No, I
because
don't.
it's a joke. So
Yeah,
like, you
It's
know
like
what I
I'm
mean?
a schizophrenic, it's all that.
Yeah, it's good. It's good.
They always-
He got a nice little corny joke. Ask Mason for his corny jokes. All right. So just so you know, before we hit continue, it takes us to this summary thing. This is for you, the agent, to know. Okay. Don't share this too much, but look, it's going to go over final expenses. IP is income, MP is mortgage, CE is child education, and CR is child rider. That's for you to know where the presentation is going to go with the videos. So once you before you hit continue here, because what pops up next is the mandatory read-off letter, right? So basically how that works is, remember, you got to be prepared, guys. We're out here, we're prepared. Somewhere, hold on. I'm bad with pulling up the Zooms. That's my bad thing. Stop share. And then it should be on this one. 1 second. So where is it? There it is. All right. And see what happens whenever you got to pause. It's like it sets it off.
Do you know
There we go.
if you have by yourself yet?
Some of it, I can bring it
So
up and-
look, this person was in the SEIU. I scroll down to the third page, usually on the pre-approach letter, and look what letter is there. It's the mandatory read-off letter for the SEIU Local 1.
You use theirs every time?
I use theirs every time. I never use the generic one unless it's a will kit or a child safety kit.
So even at the child safety, you still read that letter?
Yeah, if it's a child safe, you read the generic one that pops up on the screen. So, you ready to read the letter, Mason? You ever read the letter?
The generic one, I never did this.
Okay. So it says, "Dear member, the insurance programs being offered you today are made available on a voluntary basis to the cooperation of the SEIU Local 1 and American Income Life Insurance Company, a 100% union label company with a long-standing history of serving union members and their families. American Income Life currently has over 330,000 SEIU members covered under AD&D policies at no cost, and since 1990 paid out over $32 million in total benefits to SEIU members and their families. AIL supplemental benefits are not in competition with any group benefits to your workplace or employer, and they can complement any policies you may already have. If you choose to take advantage of any of the programs offered through AIL, your benefits program is permanent and portable throughout your lifetime. AIL supplemental benefits include automatic built-in features that help union members during hard times, such as strike and layoff waiver of premium benefit. American Income Life provides insurance services to millions of policyholders throughout the United States, Canada, and New Zealand, and has over $50 billion of life insurance in force. If you qualify, your coverage lasts a lifetime and is your independent control. Once the program has been explained to you, we're sure you agree with the many participating members how valuable this program could be in a time of need. There are several benefits available. Please take a few minutes to listen to the AIL representative who is visiting you. If they can help your needs in this area, please take advantage today. We would like your feedback, so please take a minute to complete the report form. This information helps serve you more effectively. Fraternally, Thomas Balanoff. So guys, that's actually from the union there. They sent you that letter. Now basically, guys, what that letter was saying is if I'm going through your benefits and you're nodding your head thinking, these are really great benefits, I can see why they had it set up and all the members were excited about it. They're gonna ask you to try and qualify today while I'm out here. On the flip side, I go through your benefits and you're like, they're great benefits, but they don't feel a need for me or my family, right? Then we actually would ask you not to try to qualify. Either way, yes or no, they ask us to make a decision because it's your service period. And we just didn't want you to get all the way to the end. You say something goofy like I wanted to think about it, right? So guys, like I said, either way, your group, the thing is the benefits are pretty much a no-brainer. And your group does still value your opinion on the officer report form. So just please make sure we fill that out at the end. And if you have any questions, will you stop me and ask me? Okay, great. You get verbal yeses. Okay.
Josh,
What's up?
where do you get this letter from? Like, how do you get here?
Yeah, so it's in your impact. You guys, here, I'll show you real quick. Ready?
Okay.
So here's the card. You can see the card, right?
Mm-hmm.
Well, scrolling down, you click right here, group info and certificate. This is under group info. Then you click it, pops up, and you scroll down.
Okay. So the first letter, page 1, is the letter that they got and they turned in the response card. That's the initial letter. And then this is page 3.
Yeah, page 3. Well, yeah, it's usually the second page, but if there's a lot of Spanish people, they give them a Spanish letter too.
Okay.
All right, so I read the letter, went over to so basically, you ready for this? This is crazy. Watch this, guys. What do? I keep it so simple. I say, let's examine the need for final expense protection. That's it. And I go, yes.
The warmth of family is one of the most beautiful and valued things in life. For this reason, saying goodbye to a loved one can be difficult. And even
Make
more
sure you
so
watch
when
the
you're
video
not
with
prepared.
them.
The emotional distress adds to the financial burden. It can be devastating to lose the family savings or even the family inheritance. The average cost of a funeral continues to rise, and these expenses can be higher depending on where you live. Keep in mind that funeral and cemetery expenses increase each year due to inflation and other economic factors. At 4% a year for the next 20 years, the cost of a funeral will have risen above $30,000. Expenses become even more overwhelming when you consider that Social Security only pays a $255 death benefit, and that's if you qualify. That still leaves all of the expenses for your family to cover. The last thing we want is to leave our loved ones in this kind of situation when we perish, isn't it? That's why it is important to anticipate for future events with preparation. Otherwise, who would be responsible for those unforeseen and sometimes escalating expenses that no one is ready for? We all want our last goodbye to bring comfort and leave a loving memory of us in the hearts of our loved ones. However, these good feelings can be diminished when we do not have coverage for final expenses, and a burden is presented that could mean thousands and thousands of dollars. For this situation, American Income Life recommends our whole life policy, along with the Freedom of Choice certificate. The process is simple and can be used to cover your final expenses up to the face value of your policy. Your beneficiary takes the certificate to the chosen funeral home, agrees to the service details, and writes the total amount on the back, signs it, and hands the certificate to the funeral home director. When the service is needed, the funeral home director calls the number on the certificate to speak directly to a claims representative. Payment is made directly from our company to the funeral home, and the remainder, if any, is paid to the beneficiary in a lump sum check. The decision is simple, and your family deserves it. Obtain final expense coverage, which allows you to have the freedom of choice certificate. That way, you will help avoid many problems for your loved ones. Today, you can enjoy the tranquility of knowing in that inevitable moment, there will be peace. If you're giving them the best today, prepare for tomorrow. Leave them only beautiful memories. Love is shown with action.
All right, so first off, I played that video for you guys because I guarantee a lot of you guys probably never played that video. Yeah, so I wanted you to know what it said. All right, did you hear what it went through?
Yes.
I think until you can say everything in that video, you should play the video. Now, before we go over this, guys, the reason why they had me play that video for you was two main reasons. One, it refreshes you on everything that goes into a funeral. I mean, let's face it nowadays. They say a funeral is almost as big as a wedding. The only difference between a wedding and a funeral is a wedding, you could actually plan it out for a year. If something came up, you could push it back. Shit, you could even cancel it. But a funeral, you got 2 or 3 days. That's it. So at the worst time of your family's life, that's why they created your freedom of choice certificate. And how this works is the worst time, your beneficiary, Mary, you would go down to your choice of any funeral home. Now you want to go into that funeral home saying, hey, Joe had 30,000, what can I get? Because they got so much they're gonna charge you, Mary. Yeah, all 30,000. So what we do is we just put a policy number on here. It allows the family to negotiate the cost. Once they come up with the amount, they fill it in, sign it down here like a blank check, hand this certificate over to the funeral home director, and they're done. They don't have to do anything from that point on. Now, at the worst time of your family's life, Joe, you know, Mary, you just lose your best friend that you've been with for X amount of years. That funeral home, they want paid when?
Okay.
They want it now. So instead of them bothering you for a check, Mary, when you need to be getting the family together, getting everything organized, the funeral home just calls the number right out here on the front. They send out 2 checks immediately. One for whatever is negotiated on the back going directly to the funeral home. Anything left over will go back to your family within a week in a lump sum tax-free check to wrap up additional costs. So Joe, do you have any questions on how your freedom of choice certificate works? No? Okay, Mary, do you have any questions on how your freedom of choice certificate works?
No.
No. Get the verbal yeses. They told me they didn't have no questions on whose freedom of choice certificate? Theirs. I didn't say on mine. I said on how your freedom of choice certificate works. I'm already psychology ahead. Like, I'm using things that I've learned that if I just start assuming that it's already theirs, it's theirs. It's theirs. I asked him if he had any questions on how his freedom of choice certificate works, and he told me no. It's his now. He can have it. So, after that, the proposal. Now, for final expenses, Joe recommends everybody in your age bracket, if you want to be buried, to have a minimum of $30,000 of whole life coverage in force to guarantee that your funeral and final expenses will never be a burden to your family ever again. Joe, right now is showing you have an existing of 0. So you still have a need of 30,000, and the expert simulator was recommending making sure that need of 30,000 was protected so that your funeral and final expenses will never be a burden to your family ever again. Mary, it's showing 30,000 as well for you. Right now, we actually have an existing of 10 because that's the policy your mom set up. And so you still have a need of 20, and the expert simulator was recommending making sure you had that full need of 20,000 protected. Now, let's examine the need for monthly income. Typically, don't play this video. Skip right over it. Joe, 5 years of your income came out to 240,000. You actually have 110 set up, 100 with your car insurance, 10,000 through your work. So you still have a need of another 130,000 to have full 5 years income protection. The expert simulator was recommending that was protected for, a full 5 years for you. Mary, 5 years of your income came out to 60 grand, and it was looking to make sure that was protected as well. Now, mortgage, this would be just on you, Joe. If something happened to you, there's 140,000 left on the mortgage. Well, what the company would do is they would actually just take the 140,000 and pay off your house, so that Mary can, not have to worry about the mortgage payment every month. And guys, the last area is going to be for your kids' education, and it is recommending where if something were to happen to you, Joe, that it would set aside $100,000 in place for little Joey Jr. to get an education. Now, this is their concerns catered to their situation. Like, this is their numbers put in here that it's spitting out, not anybody else's. Right? So if you're a laptop closer, you go right into the close. If you're ABCing, before you hit that continue button, you better stop sharing. If you're ABCing people and you hit continue, you're going to see a price at the bottom. If you're laptop closing them, you might want to bring back the screen for a second like this, right? Bring it back to you. But I'm going to show you guys with it on there because we got virtual people. So I would bring it back to me, and then when you hit this continue button, a price pops up. Sometimes people get sticker shock.
Sure.
So I like to bring it back to me, then hit continue, and then go into either my options, okay, or into the laptop close, like, just giving it to them right here after I punch out all the benefits. You have to hit next, and then continue. And then before you hit continue, if you go down to submit, that's how you can get to the super combo.
Appreciate it, Josh.
Do you recommended premium, Mason? Do you know about this?
What?
Recommended premium will take in consideration 5% of their income. As a family, their recommended premium would be $250. It used $243.70, which saved them $6.30 a month.
Yeah, I normally do 3%, and then I tell them to recommend 5 just to make it look like I'm, nicer.
Just go to 7 and knock yourself down to 5 then, buddy. Shoot yourself in the foot.
So that's my question real quick. Who are the people who recommend that 5% of your yearly salary is what should go to life insurance? What would be the people that?
It don't matter. It's they. They recommend.
If I wanted to be, is there a name for
They.
people who, like the U.S. Borough?
They.
In general, that's other.
How about they? That's what I was taught.
So they recommend that you use 5% of your,
There you go, buddy.
I mean, a normal U.S. citizen to use 5%.
I mean, I don't say nothing about a normal U.S. citizen or nothing, but I said they recommend, you set aside 5% of your income to protect your family. So before you show them, if your laptop closing them, if you're just going right to the laptop and that price is popping up, you have to remember to say, hey, Joe, they always make me ask, if you were to set aside just $5 for every $100 that you bring home in your check every month to protect your family, would that drastically change your lifestyle or take food off the table? No, because they didn't want to show you something you really love but just couldn't afford. So having all this area protected, Joe, to cover that, it's only going to come out to $249 a month, which comes out to how much a week? Like $70 a week. So every week, if you just set aside $70 for your entire family, if that whole situation we just went over was protected. Now, if you're going to ABC them, you still got to ask them that $5 question before you show them the rates. Always show it to them right before you show them the rates or the price. Because then they can't tell you no. You told me no. What are you talking about? You can't afford it. All right. Now,
Can I ask a question?
you could ask questions. Yeah, what's up?
Thank you. So ABC, just explain that real quick. That's just the different areas that you're talking about?
All right. So some people some managers in our agency, they close differently. Like I'm more of an ABC closer. I'll show you that here in a second. My buddy Drew, who I trained up pretty much from the jump, I taught him on the laptop and he's been laptop closing ever since. Right. And I think Jay Vaughn ABCs him, right? Rogada? Yeah, I taught Jay Vaughn how to ABC. ABC, you can kind of get a bigger check. But look, this is $249. This is a great size check.
Mhm.
You know what I'm saying? So ABC is for certain situations. I'll show you what it looks like here in a second. I'll pull up one of my quote sheets. Let's see. I don't know if I have any up yet. Let's just type this in. Or actually, I got somebody saved because I sat down with somebody and I wanted to sell them. There we go. This might work. We're not showing you that one. Quotes. Sorry, guys.
You know, Josh, when you're presenting, do you ask about, do they put away monthly savings every month? Is that something you do?
Mm-mm.
I can tell you for my financial planner days, that's something I do, that's something I do when I present, it works well for me.
Yeah, these guys, they do it too.
Well, it's just because, like you were saying, that if they're saving $250 a month anyway, then what's the objection? You know, to spending 70, 100, 150 when you're gonna earn 5 times, 6 times more.
You're right. I mean, it's something that, I mean, depending on the situation, if they're like, I guess, older, I would typically ask them. I typically do that with older seniors. Like, I'll say, like, if they're like, oh, I don't need it, I'll be like, well, are you saving anything right now? And they're like, yeah, I'm saving, all right, how much a month roughly? And then whatever they tell me, then I'll typically, like, put it into, like, they doubling or tripling up throughout their life. And even if they end up putting as much into it as they ended up saving, it's still gonna come back out tax free. So I always use it like no matter what, it's gonna come back to your family tax free. So if they're like, well, I can save that amount, you'll hear that one. I can save that amount. Yeah, you can.
Mhm.
But this is gonna come back to your family tax free and it's guaranteed right then and there, forever. You ain't gonna wait, right?
Right.
So that's what I'll typically go with that. All right, so basically, here's my ABC, guys, just for an example. I sat down with this lady the other day, I guess, and basically, I didn't even go too high because she was a little bit older, but 70,000 was like 134, 50,000 was 96, and then 30,000 was 66. Some accidental deaths, she already had 25,000, so the most more she can get was 175. I just showed her nothing less than 100, and then I think she already had some life insurance too, so she was a POS. But for some reason, my thing closed, so I apologize. I don't know what's going on with my Adobe. But yeah, before I show them the rates, I'll say, now, Joe, they always make me ask, if you were to set aside just $5 for every $100 you bring home in your check every month to protect your family, God forbid something were to happen, would that drastically change your lifestyle or take food off the table? No? Okay, because they didn't want to show you something you really love but couldn't afford. So everything I'm going to show you is going to have to do with 5%, but you make really good income, so like probably right around 3%. and I get them every time. And then after you show them the options, like just for an example, I wish Esther was still up, but I ABC her A is 70,000. It's going to get you this, and this. $134. Option B is what most people go with in your situation. You hear that? It's what most people go in your situation. It's the nationwide recommendation. Option C is like more of the foot in the door. You can always come back and increase it down the road. And then after they pick it, I say why. So I say, now keeping in mind that your family can use all of this coverage and then some when you pass away, which option works best? Which option works best to protect your family with? And then you shut up, and then they pick it, and then you ask them why. And then you say, okay, everyone loves the benefits, but unfortunately not everyone could qualify, so we just need to see if you can qualify. And you go into the medical questions. Have you had any AA or NA in the past 5 years? Any hard drugs, street drugs like cocaine, barbiturates, hallucinogens? All right, have you had any DUIs, DWIs, or felony arrests? No. And then in the next 2 years, do you plan on flying your own plane? And by that point, you should be on page 2 of the super combo, running through the medical questions. And you got to work on your speed. When you're new, you're gonna be slow.
Yeah.
You're gonna be slow, so time yourself on your e-apps and try to get it better every time. Like, guys, I could bang an e-app out like 15, 20 minutes. I'm making sales now in an hour and less. My sales are going within an hour on virtual. Old school in home, 2 hours was like my an hour and a half to 2 hours. Always an hour and a half to 2 hours in homes. On virtual, when I first started out, I was slow. It would take me about 2 hours.
Yeah.
And that's a long time to have somebody
Mhm.
sitting on a screen for. I'm telling you guys.
Right, that's a lot.
So I cut a lot of things out of my presentation, like unnecessary things that I was saying, and I kept it very simple. And I'm able to see more clients,
Mhm.
and I'm still serving them the right way. I'm not cutting that. You know what I mean? But I really got my presentation time down to about an hour.
Really? Because you're the first person I heard that's gotten done in less than 2.
I've been giving more presentations than most of these people. That's why.
So the one we did, it took 2 on Saturday. Well, it would have taken 2. It took 2.5 because there was an issue with the application at the end.
Yeah.
Mhm.
And you see it gets frustrating sometimes.
Yeah, because you've been all the way
Yeah.
to that point, and then it's like, you know.
So work on your speed. I mean, you're never gonna be like, it's gonna take you a while to get really good at it, but try to get better at it every time. You know what I mean? Like try to beat your record every time filling out the e-app, but not missing things either. Like you gotta read through all the medical questions.
Mhm.
You gotta go through all the details. It's just there's certain things that you can help speed up the process. You'll learn them.
So when you said, Josh, when you said which one works best for your family with the A, B, or C, what did you say after that?
I say why. After they tell me, I ask them why.
Okay, and then you go into medical questions.
Yeah, everyone loves the benefits. Now we just need to make sure you can qualify.
Okay.
And then I run through the first 4, and by the time of that, I'm on the super combo, and
Okay.
I'm assuming the sale from that point on. Now, if anyone ever comes up to you guys and says, "What's the most important part of the closing process?" It's the part where on the circle graph. Remember the
Mhm.
whole life, term life. And then after that, there's the circle graph.
Yes.
Right here. It's when they pick it. Like he chose mortgage, just for instance,
Mhm.
and she chose child education. That's the most important part of the closing process.
Okay, remember
So
what
if they say, what's the most important part of the closing process? It's going to be asking them out of all these benefits, if they can only choose one, what's the most important?
Okay.
That's the most important part of the closing process. The second most important part of the closing process is assuming the sale.
Sure.
Right? So I gave him the rates. He picked his option. I asked him why. Now I assume the sale the whole time. I fill out the application. Page 2, page 1, it's done. And here's the key. After you fill out page 2, go back to page 1. If you're writing notes down, give the money away. Give the money away. Give it to the beneficiary. All right, Joe, it looks like your health is great. You're going to be able to qualify. Now, if something were to happen to you, who would be first in line getting all this money? His wife could be sitting right there. I'm going to hear him say it. All right, you said Mary. I just had to hear you say it. Mary, now if something were to happen to you, who would be getting all the money for you? Joe, he's not punching or making you say that, right? All right, awesome. Now, if something were to happen to the both of you, who would be next in line? Okay, great. We're going to need their number as well. All right, so that's as far as I'm going today. I'm not going any farther. You guys are going to learn so much the rest of this week. But this has been recorded, and I hope it helps. What we're going to do is take a little break.
hear us? All right. Quick mic check. Can you hear me?
Yep.
Yes? Okay. Thumbs up, Ashlyn. I can see you. All right, cool. All right, so. Oh, that's good. How's he doing?
Pretty good.
So today we're going to go over proactively handling rebuttals. Proactively handling rebuttals. Where to do it in a presentation, give us some tips and pointers, and we should be pretty quick today with the information. So we could do probably about 45 minutes, give it a little break, and then wrap up with a half hour, or we could just run right through it for a good hour, 15 minutes or so, maybe hour and 20 and just get done. So however you guys are feeling. What do you guys think? Want to run right through, take a little break?
Yeah, we could run. I mean, I'm run.
All right,
Yeah.
fair.
We'll see what happens.
Oh, should I get the rebuttal sheet out?
No, you don't need the rebuttal sheet. So what we're going to go over is proactively handling rebuttals today. Okay. So obviously, when you give your presentation, there's at the end of the presentation, you're going to get some rebuttals sometimes. And after they give you the rebuttal, you can handle it, but that's more of a reactive approach, right? So we don't want to wait until they give us this rebuttal and then have to like come back at it with our rebuttal back to them, which is trained right in your script. I want to think about it, I can't afford it, and I don't need it. Those are the three biggest rebuttals that you're going to get. So once again, it's I want to think about it, I can't afford it, and I don't need it. Those are what most people are going to tell you at the end. So we have to make sure that throughout the presentation, we proactively handle those and we address that stuff. And they say you want to beat it up front before they ever give it to you. So, and the philosophy behind this is a little different too. It took me a while to really get this. I always thought that, yeah, you want to beat them so they don't give them to you, because once they give them to you, now you got to react and try and fight and combat. It's better if they just never even give you the rebuttal in the first place. And that's just basic, idea of it. It's like more of a barbaric idea. So when you think more intellectually about it though, I learned this maybe 7 years ago. So I've been doing sales for probably 7 years, and it took me about 7 years to really, 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 really know why is it so important to not even get a rebuttal. And I was like, you don't want to get a rebuttal, because if you don't get a rebuttal, you're going to make the sales. I thought that's what it was. And that is, but the reason that you do not want to get a rebuttal is because as soon as that client says whatever that rebuttal is, as soon as they say that into the air and into the universe, it now exists, and you don't really even want that in the universe. You don't even want those words to ever get out. And what happens now is, if I say like, I can't afford this to you, now I am going to feel inclined to prove to you